9 stocks bought, 4 cryptocurrencies, and all the dividends received this week coming up next. Hey, what's up? I'm Russ, and this is Dapper Dividends, where we are working to make work optional. We're doing that through stock and crypto passive income. We're out here in Yorkville, Illinois, riding the rapids on this bypass channel whitewater rafting course that we got here, having a good time. So I've taken a minute away from everybody to tell you everything that's gone on in the 3 portfolios this very week. Now, these dividends are combined across 3 portfolios: the self-directed IRA, our bridge account, which is taxable, and the Roth IRA. First up, $54.83 from PepsiCo, ticker PEP. We have been buying them for 1 week, every single week, on our 55th week now. Next up, Albemarle, ticker ALB, 78 cents from Albemarle. And hint, hint, they were not long for this portfolio. More on that in a minute. Kimberly Clark paid us $44.46, one of our favorite companies. Again, big blue chips, solid dividend paying company. Kleenex, Huggies, all the toiletries that we use in our everyday lives. And this is just a fantastic company that we love investing in. Gilead Sciences, ticker GILD, paid us $6.39. Now, Gilead Sciences is HIV and hepatitis C are their 2 biggest products that they manufacture. And funny thing, we just did a video on Walgreens, check it out here. Walgreens sold their Alliance Healthcare to AmerisourceBergen, and AmerisourceBergen is the #1 customer, as my sheet blows away, of Gilead Sciences. $4.08 was received from Genuine Parts, ticker GPC. Just think automotive and industrial replacement parts is the bulk of their business. So even if the world shifts into the EV space, guess what they are going to be doing? You've got it right. They're going to be making the replacement parts for the EVs. So GPC is going to have a place in this world. And last, the weekly dividend ETF, ticker WKLY, paid us 10 cents. That's on 5 shares. Now that's coming in every Thursday, once a week, every single Thursday, just like clockwork. If you're curious about the weekly ETF and getting weekly dividends, check out the video we did right here on the weekly ETF. So in the bridge account, what did we do? First off, we sold 2 shares of Albemarle. Now, for the longest time, I'd had 10 shares, and after the EVs started running up, Albemarle makes lithium batteries. They're one of the world's largest producer of lithium ion, and they have been flying up, sky-high valuations. I initially bought them because they're a solid dividend-paying company, but their price goes so high, and remember, when the price goes up, the yield comes down, and it is very low. The yield was currently 0.93% when I sold them. Now, we indeed had 10 shares. I sold 8 of them. I held on to 2 of them. We were up 188%, so getting 0.93%, I could do much better with that money. So we sold those at $167.46. That's on 2 shares. And what did I buy? As soon as we sold those shares of Albemarle, I bought 2 more shares of the #1 favorite company. Go for the top, Johnson & Johnson, ticker JNJ. Bought those 2 shares at $163.84, which was a 2.59% starting yield, and that added $8.48 of annual dividend income to the portfolio. Bought 1 share of Gilead Sciences, the aforementioned Gilead Sciences. So we received dividends from Gilead Sciences, and we rolled that right into what I call a dividend discount on Gilead. While it's not enough for a full share, it is a percentage off of that share we did buy. We bought that share at $69.28 for a 4.10% starting yield, and that added $2.84 of dividend income to the portfolio. Next up, Leggett & Platt, ticker LEG. If you don't know what Leggett & Platt does, they make cushions, mattresses, sofas, recliners, things of that nature. So they're always car seat cushions, again, tying it into the automotive. They're going to have a big place in what we do in this world. And we bought those 2 shares of Leggett & Platt at $51.46 for a starting yield of 3.27%. Added $3.36 of dividend income to the portfolio. And last but not least, Pepsi, ticker PEP. That is our 55th share. Can you believe that? When we've been doing 1 share a week, every week, and we're doing that so we get 100. And the reason we want 100 is because we want to sell covered calls and collect premium on those shares of PepsiCo. We bought that share at $149.45, which was really high. That's way up there. That's near all-time high. That is all-time highs for Pepsi. So I said I'm doing it, buying one share a week, and that is what we are sticking to. Buying them high, buying them low, paying up for quality, because it is such a important part of our portfolio, and I don't mind paying up for quality. 2.88% starting yield on that share added $4.30 of dividend income to the portfolio. Next up in the self-directed IRA, still doing a little bit of early summer cleaning, I guess. We had 2 shares of Chubb. Now this was a position that I started way back when, and I never scaled it up because they started going up in price and I bought other things. So I got rid of those 2 shares of Chubb. We sold them at $161.35. Chubb, by the way, is property and casualty insurance. Very solid company, but sorry, microphone issue here. Look at this. The plastic on this microphone broke, so I have nothing to hold it. So we'll just go and tuck it in there and whoop, just leave it like that, right? So we sold those 2 shares of Chubb at $161.35. Now they were paying $3.20 per year in dividends per share. That was a 1.98% yield, but we were already up 30% on those 2 shares. So I like to have minimums of 10 shares of whatever we're owning. So I rolled that into 2 more shares of JP Morgan. Now we're back up to 10 shares of JP Morgan. We bought those 2 shares of JP Morgan at $155.99 for a starting yield of 2.31%, so a little bit better than Chubb, but that added $7.20 of dividend income to the portfolio. So one thing you should look at is 2 of those shares we sold of Albemarle and Chubb. We lost $7.96 of dividend income, but we replaced that with Johnson & Johnson and JP Morgan Chase, which added $15.68. And that was an overall gain of $7.72 to the portfolio. And in our somewhat new Roth, we bought 3 shares of Big Mo, ticker symbol MO, Altria Group. Bought those at $47.64 for a whopping starting yield of 7.22%. And that added $10.32 of dividend income to the portfolio. And we bought a few stragglers, 1 share of Kellogg's, ticker symbol K, at $63.98 for a starting yield of 3.63%, which added $2.32 of dividend income to the portfolio. So it's really nice to have a over a 3.5% yield on a big blue chip consumer product, consumer packaged goods company like Kellogg's at over 3.5%. We'll take that all day. Bought 1 share of ticker CPB, Campbell's Soup. Very, very well diversified company, just selling all the things that we need. And these stocks should really beat inflation, because as inflation creeps in, they've already said they're going to be raising prices. They'll be raising their prices, pacing inflation. They'll be taking in more money and paying out more money to us, the shareholders. We'll get a return of our capital, and those shares, our money will grow with the company. Bought that share of Campbell's Soup at $45.83 for a starting yield of 3.23%, added $1.48 of dividend income to the portfolio. And the last share we bought was Stag, ticker STAG. We did a nice video on Stag you can find right here. Check it out. All about Stag, why we love Stag, and we're going to keep buying Stag Industrial. And if you don't know what STAG stands for, it's hidden inside the video. Bought that share at $37.65 for a starting yield of 3.85%, which added $1.85 of dividend income to the portfolio. Realty Income, STAG, 2 of our favorite monthly dividend payers. So all in all, between the 3 portfolios, that added $41.75 of dividend income to the portfolio for the week. We bought 4 cryptos this week. 2 times we bought Ethereum, which I've had issues saying Ethereum. It's Ethereum. We bought $75 worth of Ethereum at $2,100. and $55 of Ethereum at $2,072. We love Ethereum. I think that they are going to be one of the major winners that will come out of this whole crypto thing. And a lot of people worry about them, that they're not like Bitcoin, but Bitcoin is digital gold. That's something different. Ethereum is like the internet or Amazon Web Services. It's a platform. They have decentralized applications being built on top of Ethereum. They have a very, very real world use utility, and they have a team of developers that's always working to make the product better and to ensure that it is at the top of the game. And if there's any issues, they'll be there to correct it. We bought $75 worth of Bitcoin at $33,776. And again, Bitcoin is a store of value. It's digital gold. And I think it is incredibly risky to have no exposure to Bitcoin. $20 of Algorand, ALGO, at 85 cents. Algorand is going to have central bank digital currencies built on top of it, I believe. So Algorand is a project that I am happy to buy more of. And lastly, we bought $25 of Cardano's cryptocurrency ADA at $1.36. People are saying that Cardano could be the Ethereum killer. That's to be seen. I don't know, but I'm gonna buy some more of it. And just in case they are, and they do get to be a real world problem solving company that they're aiming to be, then I would like to have exposure to that. All in all, we spent $175 on cryptocurrencies this week, and all of those we are staking and earning passive income on. Follow me on Twitter at RustyRam78. Leave a comment in the description below. Did you get dividends from any of these companies? Did you buy any of these companies? What did you think? I'm gonna get back to the family. It's 4th of July weekend. We got places to go, things to do. Get out there, have some fun wherever you are, and I will talk to you in the next video.